SoFi might be entering a crucial phase, and the market conditions around it could play a big role in what happens next. So let's break it all down. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. In this video, we're taking a deep look at what could influence SoFi in the coming days. While the company itself doesn't have any scheduled events, the market environment around it is packed with situations that could drive volatility. Understanding these external forces is essential, especially because SoFi's price movements are often shaped by broader economic signals and reactions from major players in the market. Right now, investors are paying close attention to macroeconomic conditions because the overall sentiment in the market has been shifting quickly. Employment data hasn't been very encouraging, and many investors believe that weaker labor trends could push central banks to consider rate cuts sooner. At the same time, consumer stability remains a major point of focus. When consumer spending appears strong, risk-on stocks tend to hold up better, but when any signs of pressure appear, markets often react sharply. All of these underlying factors can indirectly impact how SoFi trades. Another influential area is the release of central bank updates. In the past, when the Federal Reserve's meeting notes signaled support for future rate cuts, the market responded with optimism. Investors will now be looking for similar signals again. If the tone from policymakers points toward easing financial conditions, that could support a more favorable environment for growth stocks, including SoFi. But if their outlook seems cautious, it could add to short-term pressure. Large companies reporting earnings also play a huge role in shaping overall market activity. Tech giants and consumer-heavy companies hold significant influence, and their results often create ripple effects across the entire market. Strong results from major tech companies typically lift risk-focused sectors, while weak performance can drag everything down. At the same time, companies that rely heavily on consumer behavior can set the tone for how investors view the strength of the economy. When they report stable or improving trends, the market tends to respond in a positive way. But when they highlight challenges, the impact can be felt widely. That kind of feedback often carries over into stocks like SoFi, which depend on stable consumer activity and strong financial participation. Even though SoFi itself isn't releasing updates this week, independent tracking does show something noteworthy. Recent data highlighting monthly website and app visits recorded a 21% increase, with traffic reaching 4.9 million. Historically, SoFi's member growth has closely followed engagement trends. During the last earnings call, the company estimated that by the end of the fourth quarter, it expects to add around 960,000 members. The latest engagement numbers support that possibility and suggest continued interest in SoFi's ecosystem. Alongside this, short interest remains significant, sitting at roughly 9.25% of the free float. This represents around 109 million shares currently shorted. Short interest did see an unexpected increase recently, which could be tied to broader market uncertainty. The days-to-cover ratio sits slightly above 1.5, indicating that short positions are somewhat stretched. When short interest rises during periods of volatility, it often signals increased speculation or cautious sentiment among bearish traders. Still, it also leaves room for potential upside movement if momentum turns. Looking at the options market gives another view of investor sentiment. Many bullish traders have positioned for SoFi to move into the $29.50 to $30 range, signaling confidence in a rebound. On the other side, bearish sentiment shows targets around $23.50 to $24s, suggesting expectations of a deeper pullback. This split reinforces the idea that the market is currently divided, reacting to both optimism about long-term potential and caution about short-term market conditions. Last week's trading behavior for SoFi was also interesting. the stock experienced a combination of algorithmic selling and institutional activity. There were signs that institutions may have been trimming positions, though it is unclear whether this was related to tax loss planning, risk management, or profit-taking. What made this movement noteworthy is that many past declines in SoFi were largely algorithm-driven, but this time there seemed to be human decision-making involved as well. From a technical standpoint, SoFi recently closed below the 50-day moving average, which is a level many traders use to identify trend direction. If it remains below that level for another session, it may indicate a period of consolidation. However, SoFi has historically shown strong V-shaped recoveries after dips below the 50-day line. This pattern doesn't guarantee a bounce, but it does show how resilient the stock has been during previous periods of weakness. The current price sits between key support and resistance levels. Support is building around the mid-$27 area and strengthens further near the mid-$25 range. Resistance appears near $28.2940 and then the low 30s. If the market receives positive macro news, SoFi could push back toward those higher levels. But if pressure increases across the market, bearish targets may become more realistic. With the stock trading near the center of its support and resistance range, both scenarios remain possible. Technical indicators, including the stochastic RSI, show neutral momentum. The stock isn't overbought or oversold, which means it could move quickly in either direction, depending on what the broader market does. When indicators sit in a neutral zone during a volatile environment, price action becomes highly sensitive to news and market sentiment. Recent dips in SoFi, especially those earlier in the month, created some concern, but also demonstrated how strongly the stock has continued to hold up relative to many other growth names. While growth stocks overall have faced selective selling, SoFi has maintained stronger stability. Still, because major market-moving events are scheduled this week, additional volatility is possible. Overall, the upcoming period for SoFi will be shaped more by external factors than company-specific developments. Market reactions to economic data, central bank commentary, and earnings from major companies will likely determine short-term direction. SoFi's long-term story remains intact, supported by growth in user engagement and consistent improvement in fundamentals, but the short-term movements will depend heavily on the larger environment. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.